The SharePickers Weekend Podcast with Justin, Paddy, Peter and Steve. The content of this podcast is not intended as investment advice. It is for information purposes only. People in this podcast may hold positions in the stocks they talk about. Do not buy anything based solely on a tip or recommendation. Please do your own research.
Welcome to the Weekend Podcast, everyone. Hope you're having a great weekend. My name's Justin. I'm joined by Peter. That's Pete.
Hello.
You're right, Pete. And Steve is Amsterdam's. Isn't he?
Yes, in the Netherlands.
Netherlands. Hey, checking out your Netherlands. Yeah, I don't know what he's over there for. He wasn't really explained, does he? He said he was going to Malta, didn't he? He's ended up in Amsterdam. That's a heck of a party, that.
Yeah. Well, I don't know. That's probably Steve's ability to pick the right flight and get on the right flight.
Yeah, well, maybe, it started off in Malta, and one of those parties.
Right.
Let's go to Amsterdam, guys, yeah! Why did we get here? I don't know, it was your idea last night, Steve. Oh, yeah, good. Right.
Yeah. Yes. He's partying with a bunch.
Yeah.
Partying with a bunch of Dutch guys in Malta, and they go, hey, come back to our place. And they go, yeah, okay, cool.
Hey, where is your place? Amsterdam's. He's actually in Utrecht.
Oh, yeah.
I told you my story about Utrecht.
Painful.
It's a bit of a delay here, Pete. Where are you? Are you in this country?
Depends which country you're talking about.
Well, are you in Wales? Are you in England? Or are you up in a foreign country, in foreigners?
I'm in Spanish Spain.
Ah, okay. That explains it then. Okay, all right. Okay, yeah. Okay. Did I tell you my story?
How do you know there's a lag on it? Because
I'm talking, then I finish talking, there's a gap, and then you start talking when I start talking again.
I'm doing that on purpose.
Yeah, I like to be awkward.
Yeah.
Who did that before? I'm sure I saw a comedian who was interviewed on Sky or something, and they pretended it was massive delay. It was very funny. And then he started talking normally afterwards. And there wasn't a delay. No, just messing around. That was quite good.
Yeah.
Yeah, in Utrecht. Did I tell you about my story about Utrecht before we get into stocks and shares, of course?
I don't think I think you might have, but hey, let's hear it again.
Yeah. So I was, I've had about 25, by the time I was 25, I had about 25 different jobs, and I couldn't find anything I liked, and so I wanted to be a stockbroker, but I was too thick, mathematically too thick to do it, and so I had loads of jobs. So I just went travelling. I just lost hope, and I was despondent. I went travelling on my own around. It started off by 8 of us were going to go from South Wales. They all started dropping out and all that stuff. So I said, oh well, I'm going to go on my own. So I went on my own, and it was great. I met loads of people, and one of the guys I met was Barry from Guildford. In fact, that's not his accent. Barry from Guildford it was, and a nice guy. And we got on a train. We met in the where was it? In the Alps, French Alps, because it was the Winter Olympics, Albeville. It was 1992. It was, and we decided there was no work. We were there too early. It was like a couple of weeks before. They said no until this really starts.
It was the summer.
Yeah, exactly. Yeah, right. And to come back in the winter. I said, okay. So anyway,
okay.
We have how metropolitan we are. We have 2 different accents already, not 3 or 4. But
yeah.
So we
do you mean cosmopolitan?
Yeah, cosmopolitan, metropolitan.
Metropolitan. Look how metropolitan we are.
Yeah.
Sorry.
So anyway, Barry and I we're in this little town called Albeville at the foot of the Alps there, and so we thought, well, what are we going to do? What are we going to do here? We thought, this is Europe, and we just looked at each other like Pete would have done, Steve would have done. We said, should we go to Amsterdam? And she decided to go from France to Amsterdam because we had 2 weeks to spare.
Obviously.
So we jumped on the train, and we were naked. We hitchhiked and everything. Got a train. We couldn't afford a train, but hitchhiking. This big, I say obese guy. We were actually walking. We got this lift in this car. He broke down on a German autobahn or something like that. It broke down there, right? So and there was toll booths there. And so we walked up these toll booths. We asked everyone to give us a lift. No one would give us a lift. And it was the middle of the night. So there were 2 blokes. You wouldn't give them, let them get in your car that time of night.
No.
But it was a time of innocence back then, 1992. But anyway, and all of a sudden, this big lorry pulled up to the toll booth, and he was on the wrong side, of course, because he was a British driver. And so he said, all right, mate, we're Birmingham now. He said, all right, mate, can you put some money in the towel for me, please? And he was huge, this guy. So where you going, lads? And we said, we're trying to get to Amsterdam. He said, oh, hop in, mate. So we jumped in this cab, and he was huge. Literally, he was taking up half the cab, this guy. Nice guy, though. And he said, I'm going to pull over now. I was asleep because it was the tachometer. I didn't normally rip it out, though. But he said, you have to go in the back. You can't sleep in the front because the bed goes down. I said, okay, we'll go in the back. So in the back, this big, huge HGV lorry.
Right.
It was freezing. We got our backpacks up. We got our sleeping tents over us. We had our sleeping bags on, and we were freezing all night. We didn't get any sleep. Anyway, about 6 o'clock in the morning or 5 o'clock in the morning, we knocked his cab. We said, "Can we come in?" He was freezing because it was winter, and we were close to the Alps. And he said,
Right.
He said, freezing? Go sweat my balls off in this cab. It's got internal heating. Should have come in the cab. What do you mean come in the cab? Anyway, we got to the train, and we thought we'll just go straight on now to Amsterdam. And we were absolutely knackered because we had no sleep. It was freezing cold all night. And so me and Barry fell asleep on the train, and we heard, Amsterdam. So we said, this is going backpacks, and rushed off, and we're walking around with saying, well, right, youth hostel, where's the youth hostel? And so we went into this, we couldn't find anywhere to strip the youth hostel in. And we said, look, we need to get this street here. So that's for the youth hostel. Yes, that's in Amsterdam. I said, yes, which street? He said, that's in Amsterdam. I said, I know we're in Amsterdam. Which street is the youth hostel in? No, that's in Amsterdam. You are in Utrecht. Oh, no, come on. So anyway, we jumped off, and a couple of stops. We were in Amsterdam then. We had some great times then. We went back to the Alps then, and got a job at a 5-star hotel. But anyway, yes. Okay. So that was part of it. Good.
You should write a book.
Yeah, yes, nice seamless link, Peter. So I've pretty much finished the book. I'm still adding bits because I'm walking the dog or in the shower or something. Not walking the dog in the shower, but I find that's when things. I think people, when you're young, you underestimate simple things in life, like walking the dog. That's when ideas come to me, or in the shower. Someone once said, if you're in the shower, you get in the alpha zone. I don't know what that is. The shower makes you think more. And that's when I get ideas. Right. I just keep adding to the book all the time. So when I said to you, the book is about 130 pages, it's now 140 odd pages because I keep adding to it. But Peter here is going through the book and reading through for me.
I am. I'm reading it. Yes.
Any good? Is it though? Because
I think I'm not going to. What's the word? I'm not going to lie. It is. It is a very good read. It's very interesting. Obviously, I know quite a lot of the backstory, but it is interesting to see it all written down. And I think it's going to be a very useful insight for especially new investors, but people, investors of all ages, I suppose, all experience, because there's a lot of home truths in it and a lot of things that we can all relate to, I think. And if you're starting out on your investing journey now, I think it's a really good book to read, a really important book to read. So, yes, it's a very good book. And, it's not wishing to blow smoke up your ass, but, you've done a good job.
Well, no, you keep up the misses. But listen, but it's literally, I think I start off with, the reason why I'm writing the book. And it's funny, you often think, you've got to be an expert to write a book and all of this. And I think, hang on. Every book I've read, right, on investing from people, it's either sort of journalists writing about situations. They're never actually private investors that have made money. I've read one guy's Naked Trader is very good. One of the best books I've read was Robbie Burns. And he's a guy who's making money. I thought, well, I've made money. I want to write a book because very few books out there relate to me. And that's why I think I connected with Robbie Burns' book, because you're a private investor. And I've made money, and also made lots of mistakes. And one of the biggest mistakes I made was in the last 2 years by, clinging to a sort of strategy that wasn't suited to the change in the environment. Interest rates going up, because, back then, I made a lot of money on pre-revenue stocks, pretty much high potential stocks, because raising money was easy and it's all about future potential. Now that's changed completely. But then it's made me revisit everything. Yeah. And I've revisited everything. And I thought, hang on a sec. If you actually look at it, and people listening to this, there's a lot of people who are investing in pre-revenue stocks and all that stuff. And you realize they're okay for short-term rallies, pop and drops, if you want to play that game. Some of them in this market, many of them are not popping, they're just dropping and they can't raise money. But I looked at, some of the best performing stocks. And this is the way I want to invest. I don't want to be in and out, jumping in, trading, ramping something on Twitter, then not mentioning it next week. I want to be in businesses that are getting better and better over the years, So I looked at the best performers. Yeah. I've done this quite a bit. And the thing is, and people won't like this who are on Twitter or social media who are pumping these pre-revenue stocks, but they're not the way to earn money, proper money over time. And I looked at the stocks that have performed. I looked at 10 baggers, and I basically come down to, I post a video on this, but I've done it with my investment club. There's 5 traits all those companies share. And that's why I sort of set up pretty much, and I've been messing around with this for like 2 years on spreadsheets. And now it's got to the point where through months and months of development, I've managed to get this system on this website, and it works. And what I'm doing is tracking companies that have the potential to be 10 baggers, but the traits those 10 baggers had, means if they meet those kind of metrics, they're good businesses anyway. So if you find companies with these kind of traits, you'll do very well anyway, because they're very, they're growing, they're good value, they're efficient businesses. So you may get a 10 bagger, but it doesn't matter if you don't, because the companies with these kind of metrics and traits will return good money. And the money isn't in pre-revenue or loss-making stocks. It's not. Honestly, if you look at the best performers of the last 5-10 years, and you're talking multi-bags, 10 bags, they are revenue-generating, profitable companies. And so it's a bit of a false economy. I mean, you will get big rises and big falls in pre-revenue stocks, but you win a bit, you lose more probably. And then in the end, you haven't made any money. You're trading water, So you're better off going for good businesses that are generating cash. Going forward, so I woke up this morning at 4 this morning, right? 4 o'clock this morning. I couldn't go back to sleep. Do you ever get that when you have an idea or something and you can't get back to sleep?
No.
Okay. Do you know what I have ever happened? Do you know? Tell me your bedroom.
I'm joking.
What time do you go to bed?
Probably around 10.
Oh yes, it's quite early-ish, isn't it? What time do you get up?
Around 6:30. Yeah, between 6 and 6:30. Yeah,
that's a good solid 8.5 hours sleep there, Pete.
Thanks very much. But yeah, so I know what you mean. Sometimes I wake up and I'm fully awake and I can't get back to sleep. So yes, I can relate to that.
Yeah.
So that's when some of your best ideas come, as well as in the shower and walking the dog.
Yeah. So I was looking at, so I've created this MicroCap League. It's not opened for new members yet. It will be the next 2 weeks. I'm very excited because, of course, people are not going to believe you, but the MicroCap League is made from proper stats. They're not, they're not perception of the story or anything like that. It's not about story stocks. They're about fundamentals, financials that have been reported. I mean, the only 2 metrics is growth, value, momentum, efficiency, health, and potential. Now, out of all those, the only one that's sort of, a little bit of made up is potential, because that's from broker forecasts. But if you've got a stable business and you can see what the margins are for the last 2 years, you can sort of extrapolate where they're going to go if they've been growing. So it's not really just made up. Broker forecasts, there's a lot that goes into them. So I use that. But everything else is real or historical. So it's based on, full year results and interim results. So that's real. And then momentum, which is a chart that's real time. So and I looked at the performance. I don't know if I just posted this video, and that's why I did it this morning. I thought, hang on a second, let me break down the figures. So I did one for the last year, and I thought, hang on, let's mask this against the AIM All Share and see how the best perform, the highest scoring stocks in the MicroCap League. Let's see how they performed against the AIM All Share. And the AIM All Share has been in over a 2-year bull market, and in fact, it'll be getting for 3. If you don't get out of this 2-year bear market. If you don't get out of this bear market by the 6th of September, it'll be 3 years into a bear market. That's pretty long. That's really long. So I thought let's see if there are any winners out there, and let's see if the MicroCap Leagues. And it's phenomenal. Literally, I think the top 5 have outperformed AIM by 185%. That's the average. So there's a couple above that, a couple below that. The top 5 scoring stocks on MicroCap League have outperformed the AIM All Share, and that means you'd have made money over the last 2 years if you follow those.
Yeah.
And it's not magical stocks. They are stocks with good metrics. So now I'm monitoring every company that comes out. Every bit of news comes up. Sub 100 million market cap company. They have revenue, and I literally, and they're going to be sub 100 million. I literally plug the figures into the website. You can see, and so you will capture, because every one of those 10 bags I talk about had these figures growth value, and so hopefully. Go on. Isn't
the risk that the big rise has already happened?
Because this is the thing. This is what I like. It's because the top scoring companies are still of very good value, and so they're not expensive. And that's if you ask anyone, what drives the share price. And in fact, you'll get to this in the book. Actually, I talk about growth, value, and also a pairing of growth and value. So for small cap companies, growth is the most important metric because it's a small company, you want it to grow. But and I measure 5 metrics on growth, not just top line growth. But if you compare that, if you can pair that together with value, then you've got an amazing stock, because that's what fuels the rise. Because even though they're growing, their PE isn't going up. So for example, if they grow in the top line by 20% and their profits by 20%, and their share price goes up by 20%, everything stays the same. So the price to sales ratio is the same, PEs, they're not getting any dearer. So as long as they keep growing, their valuation, the margins stay the same, their valuation is the same. So that's why those companies did 10 bags, because they didn't become expensive, because they were growing so much and they were generating so much.
Yeah.
So there will be a time, of course, when they'll slow down. They get the size where they can't do like top line growth of 20%. And when you get to sort of, a billion market cap, it gets harder and harder the bigger you get. That's why you have to start small, because just the size of numbers, they can't keep doing that. So a
lot of companies. But a lot of companies, currently, are trading, especially in AIM, obviously, trading way below sort of the normal in inverted commas, PE that you'd expect, right? Because there's a lot that have taken a big hit, and now they're trading at, maybe, I don't know, PE of 5, whereas traditionally you'd have gone a PE of 10. So why is that? And also, why do the ones that you mentioned here, why are they bucking that trend? You're saying that they're still many multiples, are they, of their earnings?
No. So
why is that? Why?
Literally, if I'm looking at the top now on the MicroCap League, right, and I click into one, and so I say, I look for sort of there's different levels, and you get color codes for different levels of growth. But one of the companies, for example, is like it's grown top line growth by 17%, half year 20%, and it's on a PE of 11. And it'll, as long as it keeps growing, it'll keep doing that, and it doesn't seem to be higher. But those companies. So when I talk about growth and value, and I also say, so conversely, if a company has value but no growth, it can stay at good value. In other words, the share price will go nowhere. And in fact, it can become, if they show lack of growth, they can become even better value. So they churn out some cash, but they're not growing. The share price can go down. So just the pairing of those two is very important. And there's very few companies out there that have both growth and value, because if it's got growth, people think the potential is big. All right. So essentially, that sort of gets priced in. Their share price goes up, and they tend to become a bit expensive. But like I said, if you get a company with growth, but it's not good value, that's a risk, because a lot of the potential is priced in. If they don't hit those targets that people have already priced in, then it'll fall off a cliff pretty much. So if you manage to get both growth and value, it's a very low risk play. And it's very interesting. I mean, go into more detail in the book there, which will be out soon. But I mean, it's you'd be surprised how few companies are out there with growth and value. I mean, I'm looking at now the MicroCap list. And some are, obviously, there's been a tough environment for some, but you imagine when these companies, actually, by the way, they're not sort of contrarian plays. You imagine when the bull market starts, then they really start to motor. If they've been motoring against the tide, they will really start to motor. Yeah. But I mean, I'm looking now, and literally out of 130 odd companies that are on this, 134 companies on this list on the MicroCap League, there's only 10 that have growth and value. So some have growth.
But when you say they're going to start motoring, what you're saying is they're going to be they'll be trading at PEs of much higher than, say, 11 at the moment. You're saying they'll be like really ramping up because of the interest.
What I'm saying is there's strong. It could be that, or it could be the fact is, even against a tough environment, there are good businesses performing well. Yeah. Now, if the economy picks up, they could be even busier and grow even more. So their valuation may not go up. So it's odd to think about it. It's a two-part dynamic. So if the growth goes up, then obviously the valuation gets better as long as the share price can go up. But I mean, share price goes up and they're growing that fast, then they don't get any more.
They attract investors because obviously of the story.
Yeah. Well, I mean, they tend to find as well, and that's why the third, so all the metrics, growth, value, momentum, health, efficiency, potential. So one of the most important things is also momentum, and that's just money flow. And people tend to look, older investors, all the charts, no, don't look at the little fundamentals, all you need is fundamentals. It's fine if you get growth and value, and the share price doesn't move for a while, fine. It may start moving sooner or later, but why not be a bit efficient with your capital and wait until it starts moving? Because you can go sideways for a year. I saw a company, record results recently, had growth and value, excellent company. Share price went down on results, and it's been a downtrend for like 2-3 months. I've only just now taken a position. Momentum's nearly there. It's so easy. I mean, if you look at the website, it'll tell you can see when to get in. But I tend to jump in before the momentum kicks in, which is like that's bad discipline because the momentum is not quite there. It can just fall off again. But so this company.
Reading your book. Or the draft of your book, and obviously you talk a lot around the financial crisis, 2008, 2009, and then the sort of the recovery from there. And I was sort of thinking, well, that's where we are now, isn't it?
Yes.
I mean, it's a different landscape, but potentially this is the the bottom of the curve. Hopefully, is the bottom of the curve. And I was thinking, this is. Now I want to learn from my previous mistakes and make some good decisions.
Yeah. Well, this has been a very long bear market, and even the great financial crash wasn't as long as this. It was like from 2007 to 2009, and in March 2009 started rallying, and yet we've been now nearly 3 years, and that's because it's a different thing with the great financial crisis, great financial crash. There was almost an immediate fix that central banks could do. And they could, help with liquidity and credit and all that stuff. You can't really do that with inflation. It's very sticky. It takes a long time to come down. And so, all you can do is ratchet up interest rates. And then hopefully it'll start to kick in. But the lag factor is so long. So, what they're doing now will have an effect in 12, 18 months' time. And so, so it will rally. Yeah, absolutely. I think the UK will. The trouble is, I think the UK central bank may go and start reducing rates before the US. But there's a worry then that it'll make our inflation worse again. If our inflation comes down, because their economy in America is doing very well, and so they can't get inflation down because people are still spending. The economy is doing very well. Ours is not. Ours is basically is on teaching on recession. So you would say that's not going to help with it's not going to push up prices if people are not spending anything. Well, America can. Now, if we reduce interest rates, of course, most stuff which are dollar denominated will be more expensive. So we import all that stuff. Especially commodities, all that stuff. So that's going to go up and raise our prices. But I think we're at the stage where the central bank, Bank of England, should start thinking about it because it may really drag the economy. We may get a double-dip recession if they don't start, giving it a bit of juice there. Bit of juice. In fact, you know what? I was listening to Wake Up to Money. Do you listen to Wake Up to Money on Radio 5 Live? I quite like that.
I don't, but
okay. Well,
I have done in the past. I'm aware of it.
Yeah. I listened to, and they are excellent. I love the interviews they do. But it was, the inflation came out this week from the UK, right? And it was meant to come in at 3.1. It came in at I think 3.2, so a little bit above expectations, but still below where it was last month. And so one of the guys, the journalists on there hosting it, they had a guy who runs a wholesale in the Midlands. He also has a nice supermarket and a wholesale warehouse as well. And he said to him, so the inflation's gone down to 3.2. Have you seen food prices come down? I thought, do you understand what inflation is? It's not deflation. Yeah. It's still gone up by 3.2%. No one's going to see any food prices coming down. It's still gone up. No. It's like the rate of inflation, the rate at which is rising is slowing. But no one, and then you see these reporters as well outside the shop saying, have you noticed any food prices coming down? No, they're not going to.
Exactly.
They're still going up. That's inflation, you fool. It's insane, isn't it? But,
the rate has slowed down. Yeah.
It's still 3% on top of what it was, like 10%. So we're trying to get it down. It's supposed to be like target is 2% every year. But yes, so there we are. And any other things we look at this week, Peter, in the stock market?
No, I mean, I'm poised. I feel like I'm in a position. I have about, probably 20% cash or something in the portfolio. obviously I'm holding some losses, but I'm quite determined to invest my way out of it. It's just knowing where the opportunities lie, and that's why your stock, what's it called? MicroCap League. Sorry, I can't remember what it was called. That's not a brand new.
Do you know what I was going to say? That when you are underwater now and you think they're a good business, wait until the uptrend starts. Technically, it is like averaging down, but once the uptrend starts, and if that uptrend starts below where your average is, you're still a loss. You can sort of average down, but you're actually buying into uptrend, so that's a lot less risk. So you can bring the average cost of those, as long as there's safe, decent businesses, they're not going to go bust and need cash. But so no, I genuinely think when you said that we are almost where we were back in the great financial crash. Absolutely, I think over the next 5-10 years, the simple fact is when you have a drawdown like 48% in indices like AIM. If you look at the chart of AIM, you'll see whenever that's happened, there's been outsized returns over the next 3 to 5 years. So it's going to happen. I don't know when it's going to happen, but when it does, you will. I think it's a one in a decade. Normally, you get they say the average bear market can happen once every 5-10 years. The last one was 10 years because there was so much stimulus in the economy pumping it up. But so literally, I think once we start rallying, it'll be like 5 years of rallies, pretty much. It won't go straight up. But I think it's a once in a decade opportunity to make a lot of money. And so that's why I've got some cash as well. But I've also got to put some cash into a house. So, so we bought a house. And
physically put it in a house.
Yeah, we need to, No, I mean, it needs some renovation and stuff. But
right, got it. Sorry.
It's funny how your mind changes. When we, because the house we got now, when we moved in, we said we had to do like 3 months worth of renovation work, which Megan's father did because he's a builder. He lived in it and it was just a hassle living in it. I put my foot through the ceiling once. He'd plastered over the ceiling, brand new ceiling, and upstairs. So in the living room, did you see that picture? It was like in the living room, he'd plastered the living room perfectly. The first room finished, done, right? So we could sit in the living room of an evening, and it was perfectly done, painted, plastered. I went upstairs to my bedroom. There's hardly any floorboards in the bedroom. And literally, Megan was downstairs with a glass of Prosecco, almost celebrating. We got one room done. And I put my foot straight through the ceiling. And she was looking up at me. I was looking down through the hole in the ceiling. She went absolutely... She went berserk.
Yeah, I can imagine.
Anyway, when we bought that house, this house we're in now, we said the next house we're going to buy, it's going to be done. I don't want any renovation work. Next house we're buying, there's more renovation work than this one. And then, what are we thinking? It's like investing, you set rules down. It's easy to put some rules down, but the hardest thing is to follow them. I'm thinking, why don't we change? We also said things, we want bifold doors again, leading out the garden. We haven't got that. But it's not so. There we are. It's all about discipline.
Oh, well.
I haven't got all of it.
Yeah, exactly. There you go.
So where are you? Are you in Spain?
I'm in Spain, yes.
What are you doing there?
Just remote working.
You found that hard to say without even smiling then, didn't you?
I am remote working. No, that's pretty much what I'm doing. I'm, finding different locations to work from.
Well, you got to say that, just in case the boss happens to tune in or something. But I'm remote working, right. Really. Yeah. Then Peter, we'll have a nice weekend. And
well, absolutely.
Speaking of the week, hopefully.
It's a pleasure. Back to reading your book.
The SharePickers Weekend Podcast with Justin, Paddy, Peter and Steve. The content of this podcast is not intended as investment advice. It is for information purposes only. People in this podcast may hold positions in the stocks they talk about. Do not buy anything based solely on a tip or recommendation. Please do your own research.